So I'm very interested to see how this week goes, especially because we have 3 unfilled gaps, all of them being to the downside from last week. Typically, this is indicative of a change of trend, could be at the micro or possible macro level of what we've been seeing so far, because this is not characteristically bullish price action if you have 3 gap downs that all were unfilled throughout the week. And also we closed the weekly candle fairly low in comparison to where last week closed. So this is very interesting to me because, like I shared in the last video, typically Thursday and especially Friday, we've seen the day end green, and green by quite a bit as well. If you look back at the previous 2 months, every single Friday for the most part has ended green. And what we saw over here was an attempt by bulls to end up closing this gap, which would mean that we'd end up closing green. However, they were unable to make it. We had a hard rejection and closed near the low of day and also the low of week. Typically, when this is the case, paired with extra indicators of weakness, for example, like I said earlier, the gap downs that have been left unfilled, typically this means that you're going to have lower price discovery the week after. So that is what I'm very interested in seeing this week. And the timing is going to be very important as well, because, for example, if we fall down tomorrow on Monday and have continuous downside, I have the 18-day cycle actually on Monday. You can see over here on the S&P 500, we have that cycle. So as you can see here, every single time 18 days passes by, we do have some form of a reversal on the S&P 500. It is about plus or minus 1 day error on it. So for example, over here, it happened to be 1 day before the actual bottom, before we continued up. And you can see for some other ones that is the case over here. This was 1 day prior to the high we had before continuing down. But for the most part, it is very good at analyzing when there's going to be some form of a local high or bottom. And some days it will be on the exact date. For example, over here, this was the exact bottom before we continued a lot higher. And right now we are heading into that date on Monday. So if we do have a sell-off tomorrow, there's potential that we can have some form of a rebound. It doesn't have to go to highs, because as of now, this is showing a lot of weakness. Like I just shared with you on SPX's chart, we did have all of those gap downs here, as you can see over here on the 30-minute chart. So we do have all these gap downs showing a lot of weakness. So if there is some form of a local low, it can be a quick rebound before continuing down afterwards. But as of now, this setup from last week specifically is bearish as long as these gaps remain unfilled. Even if the first gap was filled this week and the second one, as long as one of these remains unfilled, especially throughout this week, then there can be some more downside. Although ideally, at least if you are a bear, you do want to see all of these hold at the moment and then also see momentum start to pick up to the sell side, because that would be a clear example of an impulsive structure. Because right now we have the first ingredient of an impulsive structure. We have multiple gap downs in a row. It could also go the inverse in terms of gap ups. If you see multiple gap ups in a row, could be impulsive to the upside. And again, when something is impulsive, that typically indicates a change in trend. So you have the first step here. The next step is follow through this week, where it shows a acceleration of sell pressure on the S&P 500. So I will be looking for that. But again, also keep in mind, we do have that 18-day cycle on Monday. So if we continue down into that date, either Monday or Tuesday can prompt some form of a local low before a rebound into the rest of the week. So keep note of that. Another thing I do want to mention over here, puts definitely picked up as of last week. We still haven't seen an insane amount like what we saw in 2022. Obviously, it has been skewed towards the put side in 2023. However, the sheer volume of puts and the amount of premium behind them has not been the same as it was in 2022, and rightfully so, because we have been going up or just been sideways for most of 2023. So even the puts that were added, those most likely did end up losing, but wasn't the same amount as what we saw last year. But still, you could see puts definitely picked up based on Friday. For example, the 2.7 million in premium for 427, 1.2 million for 423. All of these were out the money. And also, as you can see over here, they were above the ask based on order details. So we're not at that insane level yet where it's just constant puts after puts after puts if you scroll down, but this is picking up, at least as of recent flow. So I will continue to monitor this into this week. And then also, as always, checking the dark pool levels feature, we're still seeing an incredible amount of premium hitting the dark pools every single day. For example, here, 3.8 billion in premium at the 436.54 level. Anything over 3 billion is definitely eye-catching, and that has not changed, even though we've seen a lot as of recently. If you go back over here to Thursday, 1.7 billion, this is probably the lowest, or at least around that range of the lowest that we've seen in the past couple months so far. So nothing too incredible with this, but again, to see over 1 billion every single day in a row, potentially 2 billion, 3 billion, even 4 or 5 billion is incredible, to say the least. And over here on Wednesday, if we go back, we had 2.6 billion on that day at 437.18. So the high 430s definitely are adding a lot of premium, at least in the dark pools. Going back over here to Tuesday, we had 1.3 billion. So this is the smallest of the week. This one was also in the high 430s at 439.24. And then we were off on Monday, if you remember, so there won't be anything there. But based on last Friday, if you remember, we had the large singular dark pool print for 4.8 billion in premium. There was a singular one. And also, by the way, it was the quarterly OPEX date. And typically we do see large singular dark pool prints on that date. So it's not going to have as much of an impact on the market compared to, let's just say, a regular day, at least a regular trading session. But we did have 3 billion worth of SIG dark pool prints on that date at the 440.85 level. So all of these prints that I showed you, for the most part, we did end up closing under last week, which is also key to note. So continue to watch all of the dark pools. Still, premium has been off the charts as of recently. And now we know, just based on dark pool prints from last week alone, if we look back here at SPY, we know this high 430s range. This is just a rough box, but you can look at the exact prints and do it on your own chart. But this high 430s range, specifically from like around 437 to this 440, we know this is going to act as some form of a supply zone if we do end up retesting it in the future. And also, this is just a sign of a distribution zone. So as long as we stay below, there can be more bearish bias until we get back to previous prints, which, if you remember, we had a couple large ones around this range here in the high 420. So that'd be the next area of interest. But mainly, largest amount of premium we've seen as of recent would be around the 417 to around that 410-ish range back during this consolidation period in April to that May time period. So dark pools can be very useful to analyze just supply and demand ranges, or just a general understanding of where bias can be. For example, this being bearish as long as we stay below this rough range right here. So I would suggest you add them to your charts because they can give you a lot of keys on where your bias should be. Last thing I want to point out today is QQQ. Tech has been relatively strong in comparison to the rest of the market, specifically SPY. So if you could see over here, based on Friday's price action, it's actually interesting. We saw a lot of strength midday, but it was also similar to SPY, unable to fill the gap that it had, because this was a large gap down that went into this demand range. Also was a neckline of this head and shoulders pattern, with this being the left shoulder, the head, and then the right shoulder. And so far, we have 2 unfilled gaps on QQQ, this being the first one over here, and then the second now, which is a fairly sizable gap. You could see we did end up selling off from this minor supply zone that I have here in the red. So this will be equally important this week. Make sure to mark this range on your charts. This is roughly 360 to 361.20 on QQQ. If this range breaks, especially decisively, look for like an hourly candle for confirmation. If this range breaks, we will see selling accelerate all across the market. Again, specifically, this would be for QQQ, but that will have an impact on SPY because this is basically holding up the rest of the market at the moment, at least with its relative strength. So this range is definitely critical for this week. I do expect it will be retested very early on, either Monday or Tuesday. So keep your eyes on this range. And also, while we're here, just a quick update on the VIX. We did see even more downside last week, despite the fact, which I showed you earlier, the S&P 500 did show a lot of weakness. So I'm interested to see how volatility will fare this week, especially with the events that happened between Friday and Saturday in Russia. Now, yes, all of that kind of has subsided since about Saturday or midday Saturday here in the States, but it can bring some more unknowns, at least because that was a big story for about 24 hours, which is pretty short. But we'll see what happens based on the open here for futures at 6 p.m. Eastern. Interested to see if we do see a spike in volatility based on the open on Monday. So again, the open is going to be very important because I'm going to be watching QQQ, especially around this level here, this 360 to 362-ish level on NASDAQ. And then also, again, we do have that turn date on Monday. So we could either see a bottom. Again, this is assuming that we have a gap down and we continue down throughout the day on Monday. If we see bearish price action on Monday, we'll likely see some form of a local low between Monday and Tuesday. So do be aware of that and prepare accordingly. And otherwise, appreciate you guys watching this video as always. And I'll see you guys next time on Wednesday.